HTJ.tax, the international tax firm for 6, 7, and 8-figure investors and entrepreneurs who are living that international life. Are you ready?
I'm a U.S. citizen who recently decided to pick up my work and move to somewhere with a better climate. Good for you. I've placed myself in Costa Rica for several months. I have confirmed that Costa Rica does not have any tax implications for non-residents working remotely for non-Costa Rican companies. So this would be once you're not tax resident in Costa Rica, so you're not staying long enough to trigger tax residency. Okay, that's fine. I have both 1099 and W-2 income from the US while I'm working remotely. Okay, fine. I have not lived abroad for more than 330 days. I left in June 2021. How does this affect my 2021 US taxes, if at all? How would it affect my 2022 taxes if I choose to stay abroad for the rest of the year? Okay, Dana, so great question. Great question. So from a US perspective, assuming that you have not, so you've been outside for less than 6 months. You can, I know when you mentioned the 330 days, you're thinking of the Section 911 foreign earned income exclusion, which perhaps is one of the best benefits for U.S. exposed persons who are abroad. So the amount moves with inflation. I think right now for 2021 is $112,000. So like the first $112,000 of income is completely protected. You declare it on your tax return, but using a Form 2555, it is more or less sheltered from U.S. tax. Now, that applies to the W-2 income. So generally speaking, once you qualify for that, if you had W-2 withholding, it could be refunded to you. But it does not work with 1099 income. So with 1099, you'll enjoy the Section 911 exclusion on the income tax. But remember, as an independent contractor, 1099 contractor, you also subject to self-employment taxes of 15.3%. That will still apply. Now, the thing is, in order to qualify for the foreign income exclusion, you do so in one of two ways. I have a really long article on this on our website, HTJ.tax. We have like 2,000 articles on international tax and probably like 1,000 videos. But you can qualify in terms of the bona fide residence test, which is subjective and qualitative, and the physical presence test, which is objective and quantitative. So basically, just being very, very brief, the bona fide residence test, in order to qualify for that, you need to be a bona fide resident of another jurisdiction. You need to have a home there, a place of abode. You need to be paying taxes there. It'd be great if you have family there. So, you pay them, your visa allows you to be there for a while. So you are definitely a bona fide resident of a jurisdiction outside of the US. So you qualify that way. The other ways on the physical presence test, which is 330 days, right? So you need to stay out of the US. You can get a partial, potentially. I'm not giving advice, but this is something to take to your tax team. You can get a partial benefit based on the foreign income exclusion because the physical presence test is 330 days, but it doesn't have to be in the same calendar year. So you can do a Form 4868 and apply for an extension, and that may give you time to count 330 days. You get an extension to October, right? And based on that, you can get a partial. So there's potential for tax optimization there. So speak to your preferred tax team around a partial exclusion based on filing an extension. But of course, regardless of what you do, remember an extension is an extension of time to file, not time to pay. Taxes are still due on April 15th, April 18th, so mid-April, regardless, right? So hope that helps, Dana.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at HTJ.tax and live that international life.